Ladies and gentlemen, yesterday Bitcoin managed to do something very, very big. It managed to break above resistance from a 5-month long descending wedge formation, which you can see on the screen here in yellow, an absolutely massive structure encompassing hundreds of days of price action, right? Close to 200 days of price action. We finally got above that level. We closed above it yesterday. It's good to see we've taken some steps in the right direction. But I put forward a community poll yesterday to you guys, and basically I asked, is it a real move or is it a fake move, right? Is it a real breakout that will be the next leg to the upside, or is it a big fake out that will eventually roll over? And you guys are pretty split 50-50 at this point, perhaps slightly leaning more bullish, but for the most part, you're not really convinced, or at least a lot of you aren't really convinced. And I actually don't blame you for that, because even though we've seen this move, and even though Bitcoin is doing good things and making steps in the right direction, we still haven't gotten over the levels we need to get over. I'll discuss those levels today. And also a major problem with this move so far is there's no real massive amount of volume backing it up. Now, with that said, my bias here is still bullish. I think Bitcoin's done a great thing, and I think the total cryptocurrency market cap and the DXY have backed it up to a certain extent, but I want to see a little bit more here. So we'll get into the medium term and long term. We'll get into the short term as well. Overall, I am leaning bullish here, but let's get into the nuances. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses, and you'll help out the channel. I appreciate that, guys. Let's get into the content. So let's just start out by assessing the wedge itself. It was a wedge, a big descending wedge formation, a pattern of bearish exhaustion, and hence a very nice pattern, a very bullish pattern, very similar to what we saw back here in 2024. We had 8 months of price action in 2024 in descending channel, which is comparable to a descending wedge in structure and in basically characteristics. I mean, the whole bearish exhaustion thing is very, very real. You see a downwards trend, but it's not a bad downwards trend. It's a good downwards trend because it's taking place within such a bullish pattern. Same thing with this descending wedge. And of course, just like the channel, it has broken to the upside at this point. There are some questions about whether the upside break is quote unquote real. And I think a lot of the concern about this upside break is that there's no real volume coming through to back it up. Now, that's kind of half true, okay? There actually is volume coming through to back it up. If we look at the short-term chart, and we go ahead, for example, the hourly chart we're looking at right now, we flip up the volume on the Binance chart, which is the highest cryptocurrency exchange with volume. You definitely do see a significant volume spike upon the break of the wedge, right? There was a reaction there, and there has been a continued reaction there with sharp volatility, which is uncharacteristic in normal, regular ranging price action. So there was a reaction. And even if you look at a daily chart, even though it wasn't, a dramatic amount of volume, it still was the most volume we've seen since the 10th of April, which is about 12 days ago. So there was some kind of reaction, but it wasn't big, okay? It wasn't like any of these big reactions or like this reaction we saw back here from the channel breaking back in 2024. But we have to remember, okay, that it was Easter weekend, okay? People aren't necessarily looking at the charts as much. First of all, it's a weekend. It happened on a weekend, especially in the US. So you have basically all institutions, all the big players are not actually trading actively. And you have the fact that most retail traders are probably away with their families doing things, or just away in general, or having a break from work or whatever, right? So there are nuances there. And for that reason, I'm not willing to completely rule out this breakout because of volume alone. There was a spike. It was a small reaction, but it was certainly there. It happened on the exact hour of the breakout. Yeah, it's not big, but I think there is some margin through which we can take that with a grain of salt given the timing of the breakout on Easter weekend. The reality is Bitcoin has broken this wedge with some sort of volume spike. It's broken this wedge with a breakout in momentum, which is probably more important than volume in a lot of ways. It broke its long-term, 5-month long resistance on the RSI, The reality is as well, the total cryptocurrency market cap did the exact same thing on momentum and on the price chart. And another fact is the total cryptocurrency market cap, not total cryptocurrency, the DXY, I should say, the US dollar strength chart essentially broke down at the same time all of this is happening, which is a very good sign. You want the US dollar to be losing strength in order for markets to be going upwards. It's a very great sign. Markets are reverse correlated to the strength of the US dollar. And a good explanation of that is quantitative easing. When you see money being printed on mass scale, that diminishes the buying power of a single US dollar. But it also means that money is flowing straight into assets through debt. So I think there is sufficient reason to believe that this breakout is real, even though it's not perfect and it's not completely clean, and it's not 100% provable. I think it's more likely not real. More likely than not, I should say, just to be very clear there. At the same time as all of this is happening, of course, the S&P 500 has seen a pretty brutal correction in the last few weeks, but the S&P 500 actually doesn't look too bad right now. It looks like it's finding support. It's stabilizing on a support block at around 5,100 to 5,000 itself. It's got some pretty big triggers coming up on momentum, with the RSI having resistance lines stemming backwards from July last year and also from February this year. We could see a chain reaction. All we need to do is break this one, and then we'll have the momentum to shift upwards and break the next one. And in doing that, we should break above, one or two pretty major macro resistance levels, and then we can perhaps stabilize and continue upwards for the rest of the regular cycle. That would be the ideal case scenario, and it doesn't look particularly unlikely. All we need to see for that to occur really is no more nonsense with tariffs, because we have to remember right now we are still in 4-year cycle, and the 4-year cycle is bigger than Bitcoin. In fact, it's much bigger than Bitcoin. It's existed on traditional markets for decades on end. So realistically, we are in a macro bullish market environment. All we need to see is the nonsense stop, and it should continue until when it's expected to expire, which will be at the end of this year, and then we can see a bear market on the S&P 500. That's what a normal cycle would permit anyway, right? And whether that changes this time with the delays in rate cuts and delayed QE, right? That's up for interpretation. That's up for analysis when it occurs, but that's the normal cycle theory. I think the actual major problem with this breakout doesn't stem from S&P 500, doesn't stem from traditional markets, because we've seen Bitcoin show massive degrees of resilience in wake of massive drops in traditional markets. We have to remember, guys, the S&P 500 started dropping on February 19th. It dropped downwards a very significant amount, okay? If Bitcoin was going to be dragged down by S&P 500, it would have done it from February 19th through to April 7th. But instead, from February 19th through to April 7th, Bitcoin remained relatively stagnant, right? It went downwards a little bit, 25%, but for the most part, right, the bulk of that drop happened in the first 7 or 8 days when all of the nonsense was going on with tariffs and all of this big news was coming out about trade war with China. Bitcoin just ranged, right? It didn't actually do anything during that period of time. So it was kind of an isolated traditional market thing. So I'm not going to sit here and say that my main concern is traditional markets, because it's simply not. Bitcoin's shown a pretty significant degree of resilience to that over the last couple of months, really. My main concern is the slight lack of volume, but I think, as I said, we can push that aside and give it the benefit of a doubt. What I'm really looking at, though, is the short-term charts themselves, like this section right here. If we zoom into the actual breakout on a short-term basis and see how it's developing, I suppose concern's maybe the wrong word. I'm not concerned about it. I'm watching it very closely because I think it's looking a little bit sketchy. Generally speaking, when you see a clean breakout, you can see these upwards bullish accumulations, which look like bearish structures, but we can't just ignore the fact that this is actually a local ascending wedge formation with diminishing volume. Okay, volume is tapering off, and it wasn't very high to start with. And on top of that, we do have bearish divergences forming on the RSI with lower highs on the RSI itself and then higher highs in the price chart. So not looking particularly strong, but as long as Bitcoin can remain above this red level right here at 86,000, I'm not going to be too pressed about it, because 86,000 is the level we tested as local resistance before the breakout itself. We had this kind of pattern going on here. 86,000 was the top of that pattern. Breaking above the wedge led to a break of 86. We flipped it for support. So as long as we can hold on to 86,000, then we're going to avoid entering a local downwards trend. If we enter a local downwards trend, well, that's a absolute textbook sign that this breakout was a trap. So look, if we want to be very clear about this, in order for Bitcoin to prove itself in that this breakout is real, all it really needs to do is remain above 86,000, remain above the local low, and continue pushing to the upside. Now, it can retest that level, but remaining above it is quite crucial. As for what we need to do to the upside, well, we need to get back into our prior macro range. And if we just delete everything on the chart, just to give you a very clear idea of what that is, our prior macro support stemmed backwards from the 2021 all-time highs and cut across like that. All we need to do for Bitcoin to be back in what I would say to be the clear, okay, back in a good, comfortable position is get right above there, flip it, and then we're in the same region we were before, okay? That would be a great step in the right direction. In fact, that would be the step in the right direction. So we've still got some work to do. We've still got some room to cover. And this breakout, of course, is not fully confirmed yet. We'll be kind of getting in there tomorrow as well and in the following days here with a magnifying glass and keeping you updated on how it's going on a short-term basis, because that's what matters here in my opinion. But overall, some very big macro steps in the right direction have been taken. We have the MACD right here. It crossed bearish in February, and that resulted in this downside move to begin with. Now it's looking like it's coming in for a bullish cross. All we need to do is take a few more steps upwards, and that bullish cross will occur. And if we see a bullish cross similar to what we did in October 2024, we should see a major leg, okay? Another MACD chart on the monthly chart. A lot of people were scared we were coming in for a bearish cross. You can see that flattening out right now, and that fear is going away as we continue upwards here. So a bit of the, a few major red flags that the bears had on a macro scale are kind of being put down. It's good to see. But we haven't quite seen enough yet. Still a few more things we want to be seeing for this to actually be a comfortable position. Right now, Bitcoin is not in a comfortable position. It's looking better than it did last week. It's got the first glimpses of an actual move forming here, but it's not been fully taken yet. Even on a local level, right? We look at this, the last, let's say, month of price action. Look at where the highs have been, right? They've been in this price region. They've been around 89, 88,000. That's where we are right now. We haven't even pushed through the local level of resistance. So definitely some steps we need to take here on Bitcoin, and we'll be watching them closely. But overall, this is good. This is better than nothing. We have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses, and you'll help out the channel. I appreciate that, guys. Let's get into the content.